Okay, all of them doing well today, but are these your only tech investment options? Is Goldman always right? Let's bring in two brilliant floor show traders for their take. Joining me now, Revere Securities' Scott Fullman and Carnivore Trading's Dutch Masters. Scott, let's get to it. I am sure you agree with maybe some of the Goldman names, but what else should be packed into right now people's portfolios before we finish out this, 55 minutes left to trade?
So good afternoon, Liz, and I'll tell you, there are a lot of decent names out there, and there's some names that are already turning the corner that I think people need to look at and own. I've been on your show numerous times. We've talked about advanced micro devices. This is really, I think, is a core holding that's needed for your tech portfolio. This is a company that's been taking away market share from Intel. There's a lot of flow going into it, and as the chip making comes back and we relieve some of these supply issues, I think that this company is going to go back and test its highs. I also like Micron technology. Again, we need more RAM for all the machines, for the cars that are being built, for all the internet devices. I think that's one reason that you really need to look at Micron. And AT&T, the fact is that the communication stocks have been so beaten up, and we're starting to see a real turnaround in this stock. I'm a technician by heart, and you take a look, you're seeing an upturn and seeing some demand come into this stock. So I think it's a good time to start getting in and owning it. Yeah, and you got Marriott and Delta, I assume, for the travel play. Everybody's got itchy feet. Let me get to Dutch here. Dutch, you, as we've talked in the past, a couple of months ago, you were shorting the NASDAQ QQQs, the triple Qs. So you took off that short. Now give me the names that you're piling into at the moment.
So we mentioned to you on the last time, Liz, and by the way, great to see you. And we're in Las Vegas today, so
nice.
What's not to love? And so Airbnb was something we mentioned to you last show that you said was going to, who's going to have some pricing power and do well. So we went with that. And I just actually got a text from my traders, said, what are we buying? They said Adobe, ServiceNow, Atlassian, which is symbol TEAM, and Palo Alto Networks, PANW. And our biggest position, other than our wheat ETF, is Murphy USA. We really like these guys out of Arkansas. They are in 26 states, and the symbol is MUSA. Murphy is just a very, very well-run business, and as oil prices stay up, their revenue top line is going to go up. But the real story there is they have 2.2 million people every day who walk through the doors of their convenience stores, which are nice and light and bright and cheerful. And people just go in there and they get what they need and they go on their way. And that's a lot of people, and their retail revenues have been exploding. And, I don't care whether I'm paying $1.75 or $2.25 for my Diet Coke while I'm on the road. I'm just going to go ahead and get that, right?
Yeah, you say Diet Coke. I'm going with Sweet Tarts, absolutely. I mean, let's be real here. Okay, so Scott, as you look at your sectors, you do find, as we say, some nice picks in tech, which is looking very strong today. Are you worried at all that this is just a bear market rally?
So the thing is that
why do I say worrying? You could be hoping so that you can get in and scoop up some more on discounted levels.
So the fact is, we get these bounces within negative trends, or counter trend rallies, which are good. The thing is that you never know when the counter trend rally is going to completely turn around and go positive. The fact is that we really feel that the market's been way oversold. This is an opportunity to pick up some really good quality companies at low prices. And even if we go back down a bit, holding them is not really going to hurt you, because when we do recover, these are going to be some of the names that are going to outperform and lead the recovery in our view. So the fact is that you can't always judge ahead of time, but you can certainly make some assumptions and try to decide which of those stocks you want to own that have really been beaten up and have a really good valuation now.
Dutch, bear bounce or a real thing?
Bear bounce, but it could be wicked strong. So We just got off 100 of the worst days in NASDAQ history, but the dollar's rolling over, rates are rolling over, market's bouncing. Market likes the fact that the rate of change is slowing down on some of the bad things.
Yeah, well, yeah, and of course PCE just shows a teeny bit of slowing down. It's great to see you, gentlemen. Please have a safe weekend. Thank you so much.
Thank you, Liz.